for a bank, choose a partner with local expertise and local decision-making. Veritex Community Bank offers solutions and a true business ally. We look forward to building your future. We're Veritex Community Bank, true to your business, true to Texas.
What's going on, Magic Family? Everybody in Houston and in Dallas as well. We want to welcome you. I am your host, KG Smooth, also known as Kris from Ready to Love. And we are here because class is in session. Welcome to Veritex Community Bank as they present summer school sessions. Everything that you didn't learn in school about finances, we are going to teach you during this 4-week program. Once again, I am KG Smooth, and I'm excited about this because this is going to be such an educational session, and the scholarship that will be shared with you during this session. The talent is, immense. But I'm wondering if you knew that according to an annual survey conducted by Compare Cards, just 33% of Americans checked their credit scores, their credit report in the past year. That is down from 39% a year ago and 37% from the year before. But the most troubling thing is that just 20% of those aged 75 and older reviewed their credit report in the last year, placing them at an increased risk of credit fraud. And I'm sure some of the elders that you may monitor or that's in your family have had some questionable phone calls from some organizations. But today we are here to break all of that down. Coming up first from Veritex Community Bank, I want to welcome Ms. Courtney Taylor. She is the SVP of Community Development at Veritex Bank. How you doing, Courtney? Good to see you.
Good to see you. Thank you, KG. I appreciate you having
all glammed up and things.
I tried to just a little bit for y'all this evening. I'm so excited to be here as we talk about credit. So, this is some great stuff we're going to talk about this evening.
Well, so the audience can just feel a little more comfortable. Tell us a little bit about yourself.
So as KG said, I'm the Senior Vice President of Community Development for Veritex Community Bank. I oversee all of our community giving that we do, our nonprofit partnerships, and all of our volunteerism that we do throughout the Houston area. And we also do so many wonderful things in the Dallas area where we're headquartered too. So just happy to be here. I help teach financial literacy as well with all the other bankers. So this is a great session.
Absolutely. And next we want to bring on the lovely Lasagna Bishop. She is the Director of Programs and Volunteers of America. How are you?
Good evening to you both. Just very excited to be here. Very much passionate about this topic. There's so much wonderful information to get out to the community. Financial literacy is one of those topics that, so much more time could truly be spent in our schools talking about it because it's so integral to career pathways that you may potentially be interested in, but we'll get into more of that later. Thanks to you both for having me.
Absolutely. And last but certainly not least, this man is the EVP of Commercial Banking at Veritex Community Bank. My man, Castile Hibbert, is back with us once again. How are you, man?
KG, thank you. Glad to be on again. And Courtney, Lasagna, good to see you all. And we're excited to be here to share with our folks how to improve their credit and some strategies to continue to improve and go in the direction that they want to go. So we're excited to be here.
Indeed. So with you being the Executive Vice President, you are a very important person. And Lasagna, before I get to you, Lasagna, tell us a little bit about, what it is that you do. I'm sorry, I missed that whole part.
Sure.
No
KG, go ahead.
Go ahead, Lasagna.
Thank you. So again, my name is Lasagna Bishop. I'm the Director of Workforce Programs at Volunteers of America, Texas. Been there about 5 years or so. Background in education, moving over to the nonprofit industry, just really to bridge a lot of gaps between education and social services. There's so many tools and resources available in the community that most people are just not aware of, such as awesome sessions like these. So just really excited to get this information out today. a lot of information to share about the Financial Opportunity Center and at Volunteers of America, Texas, and our partnership with our awesome financial literacy facilitating scholar here, Miss Taylor.
Indeed. And then Castile, tell us about what it is that you do. You're the big man. You're the money man.
Right. Thanks, KG. I've been involved with commercial banking for the past 37 years, 10 years with Veritex Bank. And what I do, I work with small to medium-sized middle market companies. We lend money, help them. We do a lot of consulting for them and help them develop strategies to grow their business. So we're excited to do that. And it's always our pleasure and honor to do that, to work with small businesses.
Indeed. Now that we've got the pleasantries out of the way, let's get to the meat, because, people on here, they want to know about credit, learn more about credit, because it isn't something that is taught in the schools. I'm going to use myself as an example. 18-year-old kid walking the yard of University of Cincinnati, see this incredible setup with table and some happy folks like, hey, you want a free t-shirt or a stuffed animal? Just fill out this form right here. And I'm looking like, oh, okay, boom, get your t-shirt, go on to class or back to the dorm, wherever. About a week later, see, there's a credit card in the mail. Oh, credit card, what? Oh, $500. Oh, man, I need this psychology book. I'm going to do that for that. The new Redman CD came out. I'm going to buy that. And then, as they come reading up on it, I'm going to just pay the minimum payments. Mm-hmm. I'm a college kid. I ain't got no money, so I really ain't got no business spending nothing anyway. Make these little $25 a month payments, and then it kind of just goes by the wayside, getting letters about the account, all of that, just being young and naive and just totally ignoring it all. Later on in life, you try to get something, a major purchase, and your credit isn't up to par because of things like that. So throughout the time that I've hosted the Community Affairs program here in Houston, formerly known as Access Houston, now the Public Affairs Podcast, when I have financial experts on, my question is, where does the responsibility lie when it comes to financial education and financial literacy? Should it be in the schools? Or should it be at home? Now, depending on which generation you grew up on, I come from the generation where a child is to stay in a child's place. So while the check is being balanced and they over at the kitchen table paying the bills, you off watching cartoons somewhere. So there's no inclusion. In school, they teach you about a checking account, how to balance a checkbook, but they don't mention at all the importance of credit. So, Courtney, the importance of credit and how it can mess you up later on down the line.
Well, KG, your story is very similar to mine as far as the whole college kid going to school, seeing the tables, boom, got the credit card. I had no job, but I wanted some clothes, right? I got a credit card. But that's what I did. I was like, oh, I can do $20 a month. And it caught up to me, right? But one of the things that I think about as we are in school and we're students, right? And we every 6 weeks or 2 months, whatever, we have a report card. Our report card is based on us turning in our homework on time, us testing, us knowing our material. I look at kind of a credit report as an adult report card in a way. And do we pay our bills on time? Are we paying them late? Like, that's how I really look at how do you build your credit report. That is an adult report card. So why is it important? Because literally credit really affects almost every financial decision that you make. If I want to purchase a home, they're going to run my credit. If I want to buy a new car, got to have credit for a loan, right? Credit card, same thing. Or for instance, also employment. How many employers these days are doing background checks? So with that background check, it's typically a credit report. They're running your credit score, right? So all of these different things are so important when it comes to your personal credit, because it really revolves around all of the decisions that you make. and Castile will get into it a little bit later too, but also business, building a business. And really the banks, us lending institutions, we look at all of that. We want to know, do you pay your bills on time? We want to know how much debt do you have? Because that goes into us making those decisions about, can we give them, a line of credit for a mortgage? Can we offer them a credit card? So all of that really comes into play. So when you go back to talking about where does the responsibility lie with the financial literacy piece, I think it's both within the schools and I think it's at home. The schools aren't
they both failed us. They both failed us terribly. They both failed us terribly because it's the Tinder trap. I mean, because when you're not educated about it, here I am, 18, they taught me that in high school. When I stepped on that yard and I saw that opportunity, I would have been smart enough to know, no, don't sign up for this because you're not able to make these payments. And later on, it's going to affect your financial history for the rest of your life. So it's like, it's the Tinder trap.
Follows you everywhere.
It does. Man, there were some slides that were that are very, very interesting on why your personal credit is important. Lasagna, you want to talk about the services? What is VOA services, and when you focus on that for a minute.
So all of the points that have been touched this afternoon are very much key pieces to financial health, is what we like to call it. So just to answer that question that you posed earlier, is it the responsibility of schools or is it the responsibility of home? I think about normal literacy, reading, writing, listening, and speaking. All of those components contribute to different aspects of communication. Financial literacy is no different. At the Financial Opportunity Center of Volunteers of America, Texas, we really concentrate on financial literacy as a piece of our bundled service model. And what that means is it's also offered in tandem with resources support, such as connections to housing or food resources, and also employment and job placement. So when you think of a bundle, you think of all of these things really packaged and wrapped up very tightly, and they go very much in tandem with training for a career pathway, and then of course moving into employment. So why and what is the connection between financial literacy and those bundled services and working, so to speak? There are many jobs that actually run credit checks in order to be hired. And so we really emphasize and focus on each person individually, because we know, just as we mentioned earlier, in education and a lot of individuals' background, everyone's financial literacy and health are very much different based on your own background and experiences. And that particular story that you shared about the table is that it's laid out with all of these takeaways. Hey, sign up for this credit card. We talk specifically about how those, types of offerings can impact, just the information that you receive about credit, and how early on is very easy and tempting to make, mistakes early on. But that is why we're here at the Financial Opportunity Center, to really help each individual person to work on increasing their financial literacy and improving their financial health through our bundled service model. That can be individual coaching. We have financial coaches on site that assist our clients. And we also lean on awesome partnerships with Veritex Community Bank, who facilitates larger group instruction that really gets going a meaningful conversation among peers and cohorts to get people talking about and open up about, their financial health. Credit is sometimes taboo to talk about. It's very personal. It really gets into the decisioning that you've had before you are at the point in your life. But, as I stated at Volunteers of America, Texas, and our Financial Opportunity Center, we take each individual person where they are, allow them to talk through and set goals with the financial coach while attending these awesome group sessions with Veritex Community Bank, and really help them to take off in their career pathway.
Indeed. And I just want to say this for all of the audience that on, if you're just now joining us, welcome to Veritex Bank's Present Summer School Sessions. This is how to build your credit. I wanted to add that don't be afraid of it. You ignoring what your credit is, what the credit score is, it's not going to go away. I was kind of the same way. And then, I went to a young lady here in Houston who gave me a free consultation and looked at my stuff. And I was just so nervous, had been, avoiding it for years. And then when she pulled it, she was like, KG, what's the big deal? Like it ain't bad. I mean, it ain't good, but it ain't bad. Like you don't have any debt. Like there's a few things, there's 3 things here. There's something there. Like you can be good in 2 months. Like what were you so afraid of? And I was just like, oh, well, and thus started the journey. So I do want to ask before we move on to Castile, why would a job pull your credit to be hired? Like what is that all about? Is that another trap, another setup?
Oh, that's a great question. So let me give you an example in this context. So let's say you're going on a job interview and you're interested in a job, maybe as some type of manager, and there may be responsibilities correlated to that person either making purchases on behalf of a company, having a company credit card. So again, you're back into that decisioning. How trustworthy are you to make good decisions on behalf of your company? And that, of course, would be based on what your previous history may have been. So that's just an example of maybe why. And that's not in all scenarios. Of course, that's not exhaustive, but that's just an example of why credit would be important in terms of running your credit before you're hired, to know the trustworthiness of your decision making in terms of making purchases.
Interesting. So with us talking about this personal credit, Castile, how is your personal credit tied into your business credit?
Okay, give you they go hand in hand. It's kind of barometer of what your performance will be with regards to your business. For example, if you're not handling your personal debt obligations, then it's fair to say that the probability of handling your business obligations is not very good. For example, if you have a lot of slow pays on your personal credit, you probably will pay your business bills on a slow basis. And let me elaborate a little more. When we're looking at business and personal credit, there's 2 things the bank's looking at. We're pulling background checks on the individual that we're lending money to in their company. When we're lending money to the company, we're looking to see if you have tax liens out there. If you have tax liens, we're looking at if you have any judgments against you for not paying vendors, things of that nature. We're looking at things such as if you had felonies, DWIs. I had a situation recently where we had an individual that had 3 DWIs, which resulted in a felony. Someone would say, well, that's personal, has nothing to do with the business. Well, the issue is if you were to hit someone a 3rd time, you're going to go to jail and your business is going to struggle and you're probably going to lose it because it can't support itself because the operator is no longer there. I had a situation recently with an individual who had multiple tax liens. They paid the tax liens over a number of years. But the question we had was, is that a pattern of how they handled their debt obligations? Are they willing, if the company's making money, do they, with a smile, pay their taxes on time? That tells us a lot about how you handle your business, whether it's personal business or whether it's company business. So there's lots of things that we look at that gives us an indication of how responsible you are with regards to your affairs. So they kind of go hand in hand. You pull a background check, you pull a credit report. If someone is overextended on their personal credit, the probability is they may borrow money from the business to pay down their personal debt obligations. So you're borrowing from Peter to pay Paul. They all kind of go hand in hand. So we look at both together, but we also ask a lot of questions of our customers to get a full picture of what really occurred so that we understand the complete. We just don't make judgments based upon what we see, we do a deep dive and ask a lot of detailed questions.
So speaking of, finding out when did this occur? When did this occur that it was a collective consciousness that they want to implement your credit report, credit score into things such as employment and business? I don't remember growing up, or even in the early, or maybe even in the early 2010s, as to where that was a requirement. It was just something that automatically popped up. Oh, wait, I just got the answer. I know why they added that. It has something to do with this. But from an industry standpoint, when did that change come?
Well, I'll tell you, I've told you I've been in the business a long time. We've always, if someone's a guarantor on our loan, we've always put personal credit reports on our guarantors. If they're not a guarantor on the loan, we don't pull personal credit reports. Probably about 7 years ago, we started pulling background checks. The industry as a whole was not pulling background checks on individuals. We may have had a customer for 10 years and we didn't pull a background check. But when we started pulling background checks, your view of that customer changed, and we got a better perspective of the way they conducted personal business and business. So it's like someone looking at a crystal ball and just getting a good feel for you, looking at your resume.
If I can play devil's advocate though, because when I look at how human beings operate, right, and we are more prone to big up our best friend, our husband, wives, our kids than ourselves. Mm-hmm. So when you look at someone's personally, just because their personal affairs may be a little muddled, how can one know that will equate to the kind of performance that one will do in a job? Because a lot of times, we tend to take care of other people's things a little better than ourselves, if you get what I'm saying. That's why I'm using the analogy in terms of you bigging up your friend versus, yourself. So couldn't the same thing kind of apply to your work ethic?
Well, it happens, but you can always fix it. If you have some hair on your credit report, through some consultation through some of the agencies and your banker and other folks, credit repair groups, they can tell you how to fix it. And it may take a year for you to fix it. Once you fix it, you can go on about your life, and you can have some best practices by paying your bills on time, by setting things up on auto debit or draft, by paying off your collection items. You can, nothing's permanent. You can always repair some things that happened in the past. I think the industry on certain things is somewhat forgiving on that, but you can't repeat some bad practices historically. You can't be a repeat offender. I think Casey, when we visited last time on y'all's show back in February, I indicated an example of someone that had filed bankruptcy twice. For the business industry, whether it's a personal bankruptcy or not, most folks don't file bankruptcy twice. It's one thing if we may overlook the first time, but you don't do it twice.
Yeah,
that's a repeat offender. You can't be a repeat offender on certain things.
Not unless you're a millionaire, you in the big boy.
Yeah, that's a
different. But no, let's talk about credit during the pandemic. There's a nationally representative survey conducted by Consumer Reports in January of this year that just a little over 2,200 adults found that 12% of people who had ever checked their credit report said that they found errors. Within 57% were able to get those errors corrected after filing a dispute. When it comes to things like that, finding things that are fraudulent or a mistake on your credit report, is that process in terms of getting those errors off, is it rigorous or is it simple? Because you have companies, you have people that make a living off of fixing your credit, getting everything straight, when in turn, we all have free will. If you want to do the work, you can actually do it yourself and cut out the middleman. But anyway, that's a whole nother thing. Are those type of folks, reputable? And how should one handle that when they find errors on their report?
Go ahead, Courtney.
So for that, I will say, I'm a person, I'm always checking my credit report. Like, that's just something that we can do. So one thing during the pandemic was that annual credit report was allowing folks to get on there. We're all granted one free credit report check a year through annualcreditreport.com. Well, when the pandemic started, they decided that they were going to allow everyone to get a weekly credit report. So you had access to the 3 credit bureaus to check your credit report on a weekly basis. They just decided to extend that grace period to April of 2022 of next year. So we still will have access to go and check that credit report on a weekly basis for all 3 the credit bureaus, the TransUnion, the Equifax, and the Experian. So take advantage of that while you can.
Free game. Didn't know that myself.
Yeah, this just happened. Like, this is just happened in the last, I want to say, month or so, where they are allowing us to go and do that. So checking your credit report does not count against you. I think I need everybody to understand that, because so many people are like, I don't want to check it. No, check your credit report. You can check it. It's when you go to other places to have them pull your credit is when those inquiries can count against you. But when you do find an error on your credit report, what do? Hopefully you're identifying that error, and then you can make those disputes online through TransUnion, Equifax, and Experian. They all have on their websites a way for you to go and dispute that. Now, I will say, if you do see an error, hopefully when you're paying your bills, you are making sure that you are keeping copies of the payment confirmation, those numbers, whatever the case may be. You always want to make sure that you have proof, that documentation that you can submit with that. And they have a responsibility or obligation to, I believe they have to respond within 30 days to say that this is valid, or no, this is an invalid, and this is something that should have stayed on your credit report. So there's a way to go in to do that disputing. I've done it before, and I've gotten it taken care of within, an easy amount of time. But you do have to have documentation, because if you don't, it can be a little hectic. But there are sample letters online, as far as like different templates that you can find, as far as the language to help you in disputing some of that information as well. You can call about it as well. And they say you can send, it in the mail, snail mail, but I just would recommend you go directly to the websites and go take care of it that way. Yeah. During the pandemic, in times of crisis, these types of situations, you have to really pay close attention to your credit report, because there are so many scams and things around identity theft, because everyone is trying to get relief. And you want to make sure that you are just paying close attention, because it could be Sally Sue's information on your credit report. And you're like, I didn't make this charge. This isn't my information. So you have to be really cognizant about what's going on. During COVID-19, we saw a tremendous amount of relief programs, right? You have to be careful on who you're giving your information to, because anybody could get that and go to town with your social security number and your credit report. And then getting that corrected will take some time. It will take some time, because there will be a lot of different steps that you have to go through when some type of identity theft happens.
So, Lasagna, I want to ask about personal credit inquiries, because, some think that too many inquiries, it looks bad on your report. The difference between a hard and a soft inquiry, I was at Macy's last week, and they're like, yo, do you want to open up this Macy's card? Hey, 10% off. And I told the lady, I was like, respectfully, that hard inquiry isn't worth this 10% that you all are going to give me.
That's correct.
And she was like, oh, so do inquiries really affect your score that much, or is that just another one of those kind of, matrix simulation, something to keep us in fear?
KG, it is super tempting to want to, have the opportunity when you're shopping to have these great cards at some of your favorite stores. And I want to talk a minute about financial coaching. One of the major and most important services at our Financial Opportunity Center. In most cases, because, if an individual has gone for long periods of time without even making any type of inquiry on their credit, or, just not really understanding how financial literacy works, it seems a bit daunting. So at our center, when our clients come in together with the financial coach, they create an incremental goal process and assessment of exactly where they are in terms of their financial health, in order to really increase their financial health and increase their credit scores. And we do this by making soft pulls, just to get people familiar with what is even on their credit. Some people, we've had clients to come in and they may not have looked 5, 6, 7, 8 years and just do not have an idea of what is there. And the process itself just may seem very overwhelming, which is, again, why our clients are partnered with a financial coach. And while they're making these incremental steps, they're setting goals for themselves. So this process looks very different for every client that we may have to come in. So yes, if you're hopping, from different stores that we love shopping in, and they're tempting you with cards, that definitely can be, detrimental to your credit score. But soft pulls, especially, as I mentioned, like the ones that we actually perform at our Financial Opportunity Center, are very helpful in making sure that individuals are knowledgeable about what is there, and they can take steps to either, have access to these templates, to write to their creditors, to figure out and to talk through conversations about even something as simple as calling to set up a payment program. If this, these very crucial conversations are intimidating to an individual, they can literally be walked through this process with their financial coach. So we really do value the services that we do have for our clients, because again, a lot of this information is not something that, they learned in math class or learned in their algebra class in college. These are skills that as adults, and in some instances, second chance adults, I heard it mentioned earlier about, individuals with backgrounds. We actually specialize in servicing individuals that come from very vulnerable backgrounds, meaning individuals that may have been previously incarcerated, those that, just come from situations of not having enough access to academic or financial resources. So, again, I'll plug our Financial Opportunity Center close to the end of the show.
Indeed. One of our comments, Courtney, what was the website for the free credit reports?
Annualcreditreport.com. Annualcreditreport.com. Yes, go on there and take some time to fill out that information. That's where, like I said, on a normal basis, we get one free look a year or one free pool a year. But right now, pandemic, take advantage of it.
Take advantage.
And
still, go ahead.
I want to just kind of give you a live example. Probably about a year ago, I had identity theft. I got a call from my HR group at the bank that said, Castell, did you apply for unemployment benefits? And I said, no, I didn't. So we immediately got the identity theft folks involved to freeze my credit going forward. I've never done that before. I had no interest in doing that, but I immediately had to go through that process. And what I found out was, going forward, by setting that up, I could see every time I was one of those guys that didn't borrow money. So I was not one that watched my credit closely, because I just don't borrow. But going forward, every other week, I would get an alert that says your credit went up 5 points, it went up 20 points. Then I had a situation where this is your credit went down about 40 points. So I pulled it up, found out that there was a doctor collection item on it. A doctor had not sent a bill for 2 years on an item. And I called them up. A lot of these doctor groups are now using collection agencies to do the collection for them, because it's more efficient and cost efficient for them to do that. I called them, paid a small little bill. I immediately keyed the information in to Experian. I said, call such and such a number. Here's the ID code. 3 days later, the credit score went back up 40 points because it was paid. and and they had accurate information where they could verify it. So my comment was, you got to pull it, you got to look at it. This was unknown, didn't know it existed, and some things will just pop up because certain vendors, hospitals are not doing their job on collections, and they'll just put it out there, and the burden is on you to pay bills that should have been invoiced 2 years before. So it's something that you have to do on an ongoing basis, stay aware of it, especially as Courtney and Lasagna indicated during the current pandemic situations. Everything we do, our whole way of life is at risk. So we have to be proactive. We have to be aware of our surroundings, both from virtually, from an internet standpoint, and physically, and mail came in our mailboxes. So I just want to share with you that, that happens to everybody.
Man, it's all a game. Castile, I want to stay with you because the goal for a lot of people is to have that ideal credit first. The goal is to be in the 700 club, and then you go on the 800 and you hear about the 850 and what's beyond that. So once you have ideal credit, like what do you do after you have ideal credit? I mean, do you need a line of credit? Should one get a loan? Like what is life like on the other side of the 800s?
I think that the life on the other side of the 800 is, you feel very comfortable that if you have a need to borrow money to buy a car or buy a house, you have the ability to do whatever you need as long as you have the income to repay it back on a timely basis. You feel very good about it. I've advised all my children about it. My son recently bought a house. His dad, thanks for advising me on how to do it. He says I had an 800 plus credit score, and he was thrilled to death about it. The key is to keep it, but you have to learn how to manage your resources appropriately, and then you work on building financial wealth, which we've talked about in the past.
Yeah, people don't realize you can literally go to the dealership, get what you want, and not have to come out of pocket for anything. When I bought a car probably about 6-7 years ago, I told the dealer I had over 800 credit score. Okay, they said, right. When they came back, they said, Mr. Hibbert, I was going to write a check for it. They said, we want to lend you money at 0.49%. How can I turn that around? Why would I write a check when I'm borrowing money for free? Because I had a very strong credit score. So the cost of money goes down when you have a very strong credit score. Lots of folks want to do business with you, and they're throwing incentives at you. You just have to figure out what's the right one for you and not overextend yourself. Thanks. We had a very great question. Someone had asked, what is the best direction to take when trying to rebuild your credit? My bank said everything looks good, but you have revolving credit that I pay things off too fast.
That pays off too fast?
Yeah, that credit that I pay things off too fast.
Well, I think, I think all of us would probably agree is less credit is better. And what does that mean? It means a house loan, a car loan, and no more than 2 credit cards with low balances, credit cards that you pay the balance off every month. So if they're truly revolving and you have low balances on them, your credit score is going to go up. If you're paying off too fast, I don't think that's the right term that they indicated to them, but 4 pieces of credit is more than enough. And then you'll see those having the right credit, not buying, rent to own. That's not good credit at all. But car note, house note, no more than 2 credit cards. You pay the credit cards off every month, and then you'll see a very strong credit score. But you got to put your credit cards on your app, on your phone, where you pay the bill off every month, or you at least make that payment every month on a timely basis. You set up on draft, so you're never, ever late. You can't ever be late.
You can't ever be late. Yeah, I have mine.
Same thing with your house, your mortgage.
And then there's so many tricks that I'm learning, like, you don't have to pay the bill on the due date. Like you can find out when the closing date is and then pay it before the closing date. That way it won't affect, the next month. There's so many ways. Let's go to the comment section. Let's go to this audience. Is Credit Karma a legitimate way to monitor your credit?
Ooh, I want to touch a little bit on that one. And you guys can feel free to chime in. So there was something I wanted to talk about, because a lot of people are thinking that they have this great credit score out here right now, but I think are failing to realize that we have two different credit scoring models out there. And there might be another one that they've created, but the two main ones are the FICO, which is the Fair Isaac credit score that has been around forever, where really I think everyone still uses this. But the three credit bureaus, TransUnion, Experian, and Equifax, decided in 2006 that they were going to create their own model called the Vantage score. The Vantage score is utilized on Credit Karma's platform, is utilized on a variety of other platforms. So sometimes your credit score is looking a bit different from what the FICO score may look like. FICO, I believe the highest is 850. Vantage, I think, I can't quote the number off top, but I know their scoring models are a little bit different. So some people may be thinking, oh my gosh, I have a 750 credit score, but yet they're looking at the Vantage credit score versus the actual FICO score. So the bank may say, no, you don't. You actually have a 689 or a 670. So it's important to try to decipher what credit score you actually have. So I would look at the Vantage score and I would look at the FICO score. To me, still to this day, FICO is king. I see the banks, the car dealerships, the mortgage companies, all do the FICO score. The Vantage score is used on Credit Karma and a couple of other different platforms. I'm not too sure on who's utilizing that platform right now, as far as saying this is your, a great credit score, but I would pay more attention to the FICO versus the Vantage right now. Until I start seeing that the Vantage is becoming more popular and these institutions are using it, I would probably pay a little bit more attention to the FICO.
Who is Isaac? The Fair Isaac credit score. Who the hell is Isaac? Who's he?
That's something they just came up with. I forgot that wasn't the, what was it?
Like we were pointing to all these folks. I don't even know who. This is my first time even hearing the Isaac. You got Isaac, you got Fannie Mae.
It goes back many years.
Like who are these people?
It goes back many years where they decided this is what they were going to use to rate us. That was going to be our adult report card. Remember?
To rate us. Yeah, absolutely. Let's go. If someone can pay a bill every month, then why use credit?
Pay it every month. I encourage you to pay it every month.
But they said, why use credit, right?
Yeah.
It's one thing to have a credit card that has a low balance on it, that has a zero usage. I mean, I used to have my Macy's card, and at Christmas time, I would get my 20% discount and then pay it off, and that was it. But I said, is it worth it to have the extra credit available, which hinders your credit score? Your credit score is going to be reduced if you have too much credit. There's credit and then there's too much credit. So you have to have the right credit, but not too much on it.
And when it comes to spending, there is a theory that is floating around, and I don't know how accurate it is, that it's wise to stay under the 30% of the limit on the card to keep, kind of you in good standing every month. Is that valid? Not
on the credit card, but your total debt ratio needs, if you stay below 30%, you're not at your max personal debt ratio. If your personal debt ratio is about 35%, you're really pushing the envelope. Your personal debt ratio needs to be as low as you can keep it on an ongoing basis. You're probably in a good place if you're, in maybe the 15-25% range. 30% is not bad, but that limits your ability to buy a house or buy cars or things like that. So don't over leverage yourself.
Indeed. And it's such a delicate balance. That's a really good point, because it's such a delicate balance of really evaluating and analyzing your spending habits versus how much debt you have, which is why, we definitely like to educate our clients about financial literacy while they are, either entering an industry or career pathway or in a training or going into employment. Just like anything else that requires discipline, it's slow and steady that always wins the race. It's not, an immediate overnight fix. It happens over time. And
say it louder for the people in the balcony.
Yes, as you increase that financial literacy and that well-being, the more financially stable you can become. And so anyway, I could go definitely down a hole with that, but there's always a delicate balance there.
I don't think the balcony heard you. Like people expect it to be overnight. It's like it ain't even been 1 month. Like credit, these things take time. I got friends that was trying to get trade lines to up there, and I was like, yo, like it's a process. You just can't jump in and expect things to happen. But listen. Thank you all so much. This was amazing. Are there any final remarks that you all have for the audience where we can reach out to you all to get these incredible services and whatnot? Lasagna, I'll start with you.
Yes. So the Financial Opportunity Center is located in the illustrious Independent Heights. We're on Yale Street. For those of you that are familiar with the area, you can find us online at voatx.org. You can call our office and make an appointment to come by or speak to a financial coach at 713-460-0781. Thank you so much. This was such an awesome session. I appreciate everyone's time today.
Oh, man. Thank you for providing your scholarship on this. Courtney?
Yes. So feel free to go to our website, veritexbank.com. /locations to figure out where we're all located throughout the Dallas and the Houston area. We partner with a variety of different nonprofit organizations like Volunteers of America and others throughout the Houston and the Dallas area to talk about financial literacy. We talk about budgeting, we talk about credit reports, we talk about identity theft, home ownership. So we're doing a variety of different things all the time. And so I get a chance to partner and talk to folks that are in Houston and in Dallas about all of these different things and really just make sure that we are spreading the wealth as far as the educational knowledge that we have here from Veritex. So thanks for having us again. We appreciate it. We look forward to continuing working with you all and sharing what we know, what we do.
Indeed. Castell, any final words?
Well, I just echo Courtney's comments with regards to the bank and our commitment to doing business with our folks in our communities. Those that are interested in establishing businesses or have existing businesses and want a little additional guidance, I'm glad, or my coworkers here at the bank are glad to visit with you at any time. I can be reached at 713-275-6704, 713-275-6704. We're glad to talk with you to give you some direction. Our pleasure.
Well, thank you all so much to the Magic family, to the entire Texas family, Houston, Dallas, and everywhere else. We'll be right back here next week, 6 p.m. Central Time for Veritex Bank's summer school sessions. Next week, I believe we are talking about home loans,
home ownership,
and things of that nature. So, family, next Thursday, 6 p.m. Central, we will be right back in this thing. So thank you all. Courtney Taylor, the Senior Vice President of Community Development for Veritex Community Bank. Mr. Castile Herbert, the Executive Vice President of Commercial Banking for Veritex Community Bank. And Lasagna Bishop, the Director of Programs for Volunteers of America. We thank you all for this summer school session, and we will see you next week. I am KG Smooth, and on behalf of Veritex Community Bank, thank you for tuning in, and we'll see you next Thursday.
Our pleasure.
Thank you.
Thank you.
When you look for a bank, choose a partner with